Okay, testing, 1, 2, 3. Hey, this is pretty cool. So I bought a super fancy keyboard and I programmed the macros. So now I can switch between these scenes from my keyboard. I don't even have to use my mouse anymore. So I got to get used to it. It's kind of neat. Right on. Thank you, Amazon.com Prime Day. Anyways, hey, good morning, everybody. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. How cool is that? Apparently, it's the world's fastest keyboard. And it's so funny, too, because your hand just gets near a key and it click. Oh, what? I didn't click that. Click. Whoa. So apparently there's fast keyboards and slow keyboards. This one's so fast. I'm saving so much time. My productivity has gone up like crazy amounts. So anyways, good to see you, everybody. How are you doing? My name is Wayne McDonald. I'm a currency trader. This is Forex.Today. So you're probably in the right place if you're interested in all things Forex, Euro, dollar, yen, Swissy. That's cool. Other forms of money might be gold, oil, Bitcoin. That's cool too. So there's lots that we can cover today. I like to use fundamental analysis to set a long-term bias based on global macroeconomics. I use technical analysis to separate price and time, because in Forex, that's all there is, price and time. So I have to separate the two. And ideally, align with some sort of congruency, my technical trades with my fundamental bias. So that's what I do, and I'm here to share it. I've been doing this a couple of decades almost, not quite 20 years, but more than 15, so that's enough. That's more than your last guru. So that's cool. What else? 15 years of experience is pretty decent. What else can I share? Above my head, which you can't see right now, is a Harvard degree from macroeconomics, so I know a little bit about those subjects. So that's really cool. So ask me questions about technical and fundamental analysis. Also, I passed the Series 3 so many years ago. But the Series 3 is sort of your governmental stamp of approval that you know things about fundamentals. Although really it's more like A, you know the regulations, and then B, if you're an elevator grain operator and you're purchasing wheat, you're purchasing September wheat from a farmer, but you're worried about prices going down in the next 30 days. How do you use options to hedge yourself? And if so, can you do the math? So I've done all that too. So pretty neat stuff. I'm here to share it. Why am I here to share it? I'd like you to be successful. Maybe it'll work for me one day. Or you'll just be hugely successful. And what you'll do is you'll thank me by investing and donating a whole bunch of money to your local hospital, and you'll build a children's cancer ward and you'll name it after me. Cool. That's cool too. So that's neat. So thank you for being here. Also, you're a trader. You're going to need a broker. Traders Way sponsors our community. Please give them an opportunity to earn your loyalty and respect. That's all they're asking for. Traders Way would like an opportunity. They're asking you politely. In fact, they're enticing you maybe just out of respect, out of politeness, because they're investing into your future today. You say, well, you know what? I need to visit tradersway.com. I want to show support for this community. So I'll open up a demo account and you play some trades. That's all they're asking, is an opportunity to earn your loyalty and respect. Tradersway.com. Thank you, Tradersway. By the way, like I said yesterday, I was just on the website looking for something on Tradersway and noticed that they cut their ECN commissions by 50% way back at the beginning of COVID just to support their customers. What happened to JP Morgan during this period? What happened to Goldman Sachs during this period? They made more money on trading than they have in the last 10 years. Did you hear that? If they took if Goldman Sachs, for example, took the first 9 months of 2020, just the 9 months, and made that a 12-year period, it was the best year in 10 years. Just the first 9 months of this month. So that's what the professionals are doing. So hopefully you're doing aight. And of course, Traders Way is trying to support you by cutting the fees of your trading by 50%. Thank you, Traders Way. So this is exactly where we left off yesterday in the live trading group. And we spoke about this particular setup, I think for 90 minutes. Everything about it psychologically, the good, the bad, the ugly. This is the one thing we talked about in great detail. And in fact, the greatest part of the detail had to do with the psychological aspect of being in this trade. And there's very few technical reasons to be a buyer in that situation based on what has happened in the past. And that was the whole point. What happens in the past is relevant, but not the reason. Okay? So we have to use our human psyche to say, okay, I know where we've been, but I believe we are going, right? You know where you've been, you can see it, but you also have a destination in your mind. Okay? And having that destination in your mind says, okay, I understand where we've been, but I also know where my next step is going to be and where the step after that's going to be and the step after that. Okay? And you're going somewhere. And there are points in technical analysis where you have to say, okay, I see what has happened in the past, but that doesn't necessarily reflect what is about to happen next. It does not necessarily always project the future. So it's how do you do that right was the conversation for 90 minutes. Yeah. So I'm glad it went up. Okay. It might not be right, but it was right now. Cool. So you should be up almost 40 pips plus spread, 35 pips, 33 pips. Okay? And the conversation had to do with, you know, being right versus being in the trade. I had to move that camera. Okay, there's a difference between trying to be right versus trying to be in the trade. Thanks, Shug. Appreciate that. Check this out. Yeah, thanks, Shug. Yeah, I had some fun programming my my new keyboard. So I have the Razer microphone, the Razer webcam, and now I have a Razer keyboard. The Black Widow Elite, if you need to know. Because, like, Black Widow keyboards are for kids, but Black Widow Elite, shut up! Yeah. So, anyways. So, here we are tiptoeing in. So, hopefully for everyone that is in my Thursday war room meetings, I hope that was beneficial. 90% of that is psychological. The conversation there, 90% of this was psychological. Okay? Cool. All right, let's take a look at the indices. Over the last few hours, dollar's down a bit. Okay. Yen is down a bit. Yeah, a bit. Swissy, yeah. CAD not up. Kiwi not up. Pound not up. Aussie not up. So it's just euro, dollar, euro, yen. All right. Oh, what is that rock? I got it here. Oh, wait. I have to do it from my keyboard. Full screen is F4? Oh. Whoa. What was that? Don't do that. Look at that. It opened Meta Editor. Oh, this is going to be complicated. Oh, it did work over there. Oh, now my keyboard is doing multiple things at once. Anyways, somebody asked, what is this? Oh, wait, it went away. There we go. I guess I have to watch. Anyways, what do you think of that? Sparkly, shiny. Isn't that cool? Money! Anyways. So, oh, and I have to go now. What are we, F5? Dang, that's cool. It works. Sort of. No, it does multiple things at once. So oh man, it's not working very well. So I hit F5 to switch the scene, but it still does the old F5, and so it's refreshing pages. And boo. All right, I'll have to use something different. Okay. Cool. So anyways, let's take a look. Right now, apparently the only currency pair that's working is the one we set up. So that's, I guess, lucky or sad, one of the two. Here we are on our rand. I'll remind you of the time frame. Okay, monthly. And we have one trade, right? One trade plan outlined here. There's no other trade plan. There's, right? We have this, and we have this, and there's nothing else. And it's not falling as fast as you would like, but it is not working. And this Euro Rand is interesting because maybe it's the, right now it shows the neutrality of the market. It's kind of interesting, I think. Okay. So wait, it's not working. It's just not working. Okay. Here's our peso trade. Same scenario. Let's remind ourselves. Okay. This is the trade of the day. Isn't that neat? Day trading. So the cool thing about this and the way that this chart is set up, there's only sell zones. There's no buy zones. Why are there only sell zones? Because as a bear, I filtered out all the buy zones. I'm not interested. Yeah. Yeah. Thank you, Maida. Check this out. Yeah. This girl is on fire. Yeah. Anyways. So there's one way of looking at this setup. We can look at it from a different point of view. So I have swing bearish bias, not daily day trading, but swing trading bearish. And we know we had all these like sell zone, sell zone, sell zone, sell zone, and sell zone. But notice all those sell zones are in a sell zone. Is that helpful for you technically? That this is your first plausible selling price of the week, and then this is your second plausible selling price for the week. Okay? Okay. Michael says if it's lateral or bullish, why trade it? Yeah, nobody said you would. Okay. Then you can change it again, and this is your position trade now. So position trading bearish. And you know that for the month of October, this is where you wanted to sell. Okay? And now remind yourself, there's your monthly sell. Here's your weekly sell. And inside that, you have like a daily sell, a daily sell, a daily sell, and a daily sell. Do you see how they come together now? Because stuff like what we see now would have existed up in here. And so where are we now? The reason I bring this up is you might overcomplicate things, especially if you live on a 15-minute chart. And you got like, in this noise, you got slashed, right? You died of 1,000 lashes, right? And you're like, well, but actually it was pretty simple, right? It was pretty simple. See how this is a roll reversal, right? Roll reversal, and then, right? And of course, you know this is down. So up here is down. Over here was down. Over here is down. And you did, right? So like, it's actually quite simple. Okay? So I'm just wondering, do you overcomplicate things? And one of the things we're always trying to do is simplify. When I was a venture capitalist, I saw lots of really cool stuff, but rarely invested if it was overly complicated, because overly complicated means expensive, and it also means that it will break. Not interested. Okay? What do you think? Well, the issue is whether you get it overcomplicated or not. All right, so now this is up 50 pips. And once again, we spent all of yesterday when we were here setting this up. Okay? So hopefully you haven't missed it. Han's in it. Master Trader's in it. Johnny's in it. Anybody miss it? Cool. Ronald was waiting, finger on the trigger. All right. Got my hands in my pocket, got my fingers on the trigger. Cool. And there we go. So you're either on your way to 120 or you're on your way to break even. Take a look at some yen. Okay, so now you have to do something similar for yourself. Is this bullish? No, there's nothing on this chart that's bullish. Can you be a bull here? Yes. But nothing on this chart would make you a bull. You wouldn't look at this and say, oh my God, that's it. That's it. That's the thing I was looking for. That is golden. Free money. Okay? But if you're already a bull, do you have an opportunity to take a shot? Yeah. Yeah. Ooh, for sure, eh? Does it mean you're going to make money? No. Can you take a shot and get your stop to break even before there's any serious risk or a small loss? So for example, if in the next day or two you get something like this, would you buy it and put a stop, drop a stop? Okay. What if you break even? What if you lose a little bit of money? Well, 40% of the time, that's what's going to happen. What's the big deal? Okay, what's the big deal? Your losses are small, almost tiny, right? Somewhere between -3 and -33, most likely. And your winners are 300, so what do you care? Okay. Cool. If you're a swing trader, you see this as a bear and you see this as the target. Typically an M3 only produces an M1. Okay. In this case, we got the full Monty. This is the aggressive target. And seems like we've held up beautifully. Having seen this, do you think traders use these pivot points? This is the most important sell. And to add beauty to something that's amazing, this is the exact moment in time you would want to sell it. That's the exact time and the exact price you were hoping for if you were a bear. If you're a bull, you should say, oh my God, look at that. That's going to be a challenge. Okay. There's a weekly and a monthly pivot point overlap right here. Isn't that amazing? So sell off this pivot into that pivot. And then once you get the lower low, it used it again. And then down, right? And then down. And then down. These are all price action. And then this is the out, right? The down and the out. Beautiful. So if you're a bull now, you're thinking about the future and what it would look like. And if you see what you think, do you do it? I don't know. Okay? Nothing on here says up. You have to understand that. Okay? Nothing says up. Doesn't mean it won't go up. Okay? You'll see there are lots of very interesting opportunities. Now, the congruency that I see here is that bears, who had a wonderful week this week, congratulations, bears, they're supposed to get out. 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 Okay? Notice that we have the Aussie yen, the Euro yen, the Kiwi yen, the pound yen, and, I mean, they all have their own roles within macroeconomics, right? They all have their place in the world, but our tools that we use to analyze market conditions say the same thing. At the very least, our tools tell us there's a high probability of an exit. Very cool. Now notice we knew that yesterday. We knew that yesterday. We knew that yesterday. We knew that yesterday. And many people don't, and then they don't behave properly in this scenario. Okay? So like, let's simplify this. Okay. That's how you might be trading. This is my standard operating procedure for trading. It's lacking a leading indicator. Wouldn't it be nice to know where exits would occur? Wouldn't it be nice to have a leading indicator that tells bears where to target, and at the same time that tells bulls where to wait? Correct? I have to turn on the conservative target here. Oops, wrong one. There we go. Okay, so let's take a look at this. Bears knew to sell here, and they know to exit here. But you wouldn't have known that without a leading indicator. Isn't that cool? Okay. Isn't that cool? Okay. For bulls, this is your up. For bulls, this is your up. And for bulls, this is your up. What do we know? Well, as long as you're climbing above them, all is good in the hood. All is right in the world. Right is rain. And when you breach below, you're out. You're done. Enough said. Week's over. Sorry, bub. Same thing for bears. Bears might have been selling here, 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 and here, and they had a beautiful run. And all of a sudden it popped up above their sell zone, and they're done. Do you sell this other one? No. Do you sell this other one? No. I mean, you have to make choices, right? This one just happened to open perfectly. Okay. So, check this out. Bulls are trying to decide, do they buy here for next week? And bears are trying to decide, do they sell here next week? Okay. And so if you're a bear and you believe you got this, great. You got the lower low, lower high, lower low. Not complicated. Easy peasy lemon squeezy. It's only complicated when you haven't made a decision and you're expecting your charts to tell you. You're expecting your indicator to tell you. You're asking your MACD to make a decision for you. Okay? By the way, it doesn't tell you that. The moving average convergence divergence indicator only tells you the separation between two moving averages. They're either diverging or they're converging. Okay? But they don't tell you how to trade. So if you know what you want to do here, it's easy. Easy. Because you either get something like this or you don't. And if you don't trade it. If you do, you trade it. And if you do trade it, you're probably right. Right? You're probably right. That's the whole point of trading. Your forethought. Even if you're wrong, your malice of forethought is fine. It doesn't make you guilty of treason, guilty of a crime like in... So there was a time in my life where in the 90s I wanted to be a lawyer. I thought I was going to be a lawyer that I would argue in front of a crowd. Yeah. So one of the things a lawyer has to prove is malice of forethought. In this case, that means you had a premeditated plan. You thought about it. So all I'm asking you to do is to think about it. To know what you're doing before you do it. And in those situations, you're probably correct. You're good enough. Your technical analysis is good enough. Okay? Because even if you're wrong on your fundamentals, or you don't have a fundamental bias at all, but you flip a coin, you're like, I'm a bear, for no other reason except you flipped a coin. So now if you use technical analysis properly, you sell when the probabilities are high. Okay? And you're probably right. Why? Because you're only trading when probabilities are high. I mean, that's it, right? So I implore you, somehow make a decision. Please. Okay, now, what are we looking at? Do you want to do Brent for Noki? Nah, it's kind of sideways. WTI, it's kind of sideways to up. But remember, our whole discussion the last few months has been you're either a buyer at 40 and you think it's going to 50, or you think it's going from 40 to 30, and here we are at 40.67. So we're moving fractions of a dollar. I used to make $3 in a minute on oil. And now it hasn't moved $3 in a week. Can you imagine? 1 or 2 minutes I could make $3 on oil. Now it's only moved $1 in 5 days. So I'm kind of glad that we don't have that trading anymore. It was pretty crazy those days. So here we are on gold. Same thing. We've been farting around with this since the middle of September. Support, and they're supposed to be up, but we're not getting it, but we are also not getting it. So nothing's happening, but you're probably profitable, but you're also vulnerable. Okay, so you might be a bull and it's not going up, but it's also not going up. Okay, so yeah. So isn't this interesting? Maybe gold helps you analyze market conditions for investing and trading in general for all. If you want to treat gold as a type of currency, it's not an M1, but it might be an M2 or an M3. So you might want to say, you know, if gold ain't moving, nothing's going to move. Might be oversimplified, but it hasn't done much. Okay, so you might want to compare your trading with gold if and say, well, I might be over trading. If gold isn't doing nothing and you're trading, I don't know, I'll just pick a currency, Aussie, Swissy, and you're not getting the results you want, you might be over trading. Cool. And here we are, Bitcoin. Once again, this is super slow for the month of September. We had it coming up and down. Well, it went up and down, but up and then down more than I thought, but not a lower low. So then we have our October plan, which is further up, down, up. And we got that. So we got the October rally. We got the October breakout. Then I expected, as we discussed a week and a half ago, a pullback, right, to this area right here. And then the potential, obviously, for a new higher high. Okay. Okay. Once again, you might be overcomplicating things, and you might have had 27 trades in here, and you're frustrated that it didn't go up and it didn't go down, and yet there was only sort of one play, right? Only one likely play. You wait for the role reversal. Okay, think about it. I wrote a book something like 14 years ago, and even then that was old hat. But I'll tell you, the reason I put it in my book, like, let me tell you the history of technical analysis. When I first started FX Bootcamp nearly 20 years ago, people would come in and they were like me. They had to scrounge around for information on how to trade. And for some reason, a whole bunch of people were taught that in this scenario, right, you wait for the break, and you wait for like your 27 levels of confirmation that it's broken out, and then you buy it. I think the rule was you wait for resistance to break, okay? And after the candle closes, you wait 3 more candles to close above the resistance, or in the opposite, below support. And then once you got that 3 levels of confirmation, then you buy. People would come in to FX Bootcamp and have that as fact. And I'm like, that's the dumbest thing I've ever heard. I don't think I've ever seen it work. And I'd go into this big speech, and I taught people how to trade properly. You let it break, and then once it breaks, you buy the dip. You buy here, not here. Standard operating procedure. But this is what people were doing. They were, right? Because the argument was, well, if it closed 3 candles above resistance, resistance is broken. So you should buy it high. And I'm like, that's the dumbest thing I've ever heard. But that's what people were being taught. Also, people paid $3,000 to trade on a MACD. They called it Forex Made Easy. You're like, wow, really? Okay. Has anyone here purchased Forex Made Easy? I wonder if it's even a thing anymore. No, it's long gone. Good. You are not alone. So I think this is going to come down to next week. You're already in next week's trades. It's all been done. It's all a done deal. Nothing there though. So yeah, you should be done for next week already. That's the beautiful thing about swing trading. If you have a job, I want you to think about this. If you have a job and you have to work and trading is inconvenient for you, you must learn how to swing trade. Because swing trading and a derivative of swing trading, there are two derivatives of swing trading. There's day trading and then there's position trading, all of which are a type of swing trading. So if you can only dedicate an hour or so a day to trading, you need to know how to swing trade. Right? That's it. And for the more detailed strategies where you have to be in the pocket to pull the trigger, you can leave that for later once you've, been able to quit your job. The thing is, I don't really want you to quit your job. I want you to replace your job. But you're going to need as many forms of income as possible. Because the worst thing in the world, the greatest sin you can do as a profitable trader is pay yourself your money. It's going to be the most expensive thing you've ever done in your entire life, is take money out of your trading account to buy milk and eggs. Because milk and eggs have a horrible return on investment. If you go out and you buy a TV to put on your wall and you use money from your trading account, it's $1 million piece of plastic junk. So the worst thing you could possibly do is take money out of your trading account. So what you should do is have some side income that you could earn so that you don't have to spend your money from your trading account. Okay? What I'd rather you do is, have your side gig. Okay? Have your side gig. Let's say you make, 10 grand doing whatever you're doing. Don't quit your 10 grand job. Your 10K job, keep that, right? Keep that income stream and turn your $25,000 trading account into $5 million. Now, it'll take you a decade or more. That's all right. Don't worry about it. And then when you get to that level, if you want to retire, retire. Or you can take that money then and produce that into some sort of income producing stream. Okay? So we're talking about Trump yesterday, and I'm not going to get into this, but the billionaire lifestyle. You have to understand, if you're a billionaire, you own multiple companies, and multiple companies are paying for all your lifestyle. Okay? They're expenses. It's all right, Golden Bull, Signals, Twitch TV. That's okay. I'm not asking you to love them. I'm talking about how a billionaire lives. Everything they do is a tax write-off. And very few billionaires sit around and watch TV all day, right? They're not sitting around watching Bachelorette. They're counting their money. But anyways, what happens is everything they do is a tax write-off from one of their companies. So their living expenses is generally zero. I'll give you an example of a billionaire here in Atlanta. I think he's still alive. Does anyone know Ted? Ted Turner? Founder of CNN? Multi-billionaire. He's the largest landowner in the United States. He can get on a horse on his ranch and ride to Canada from Texas. He can get on his Texas ranch, which is on the border with Mexico. He might have died. He's old enough. Actually, you know what? He said something quite funny, Michael. He may have died. But he said recently that he's got a rare form of Alzheimer's. He did a press conference maybe 2 or 3 years ago. And he said he has a rare form of Alzheimer's, but he can't remember what it's called. And you have to admire that. That's what he said in his press conference. Yeah. I mean, come on. You might love him, you might hate him, whatever. But to give you an idea, like, not only has he made billions on CNN and TV, remember he owned Turner Broadcasting, he owned Turner Field for the Atlanta Braves. I mean, he's got money, right? But his idea was, if he's on his ranch in Texas on the Mexican border, he wants to get on a horse and ride to Canada, never leaving his property. And I think he got close to that. Okay? But I'll tell you, I'll use him as an example, and I explained this to my children, actually. You know, I'm a funny guy, I guess, but I took my children to Atlanta, and about, 5 blocks from CNN, Ted Turner owns a building. Okay? Great. On top of his building, which he would not own himself, he would own a company that owns the building. Even if it's an LLC, it wouldn't be Ted Turner's building. It'd be Ted Turner LLC building or whatever. Okay? So he owns a company that owns a building. And on top of that building, he has a penthouse. And you can see it. You can look at it. You can see it. 90% of it is outside. So there's like maybe an 8,000 square foot apartment, but there's probably 20,000 square feet of roof deck, so he can look at he can actually see CNN from his patio. But there's a huge outdoor area. It looks cool. But he owns a building, and at the bottom, guess who a tenant is? Ted's Buffalo Grill. He owns a restaurant called Ted's. Why? Because at Ted's they serve buffalo. Why? Because he owns companies that own all that land. The land from his ranch that goes from Mexico to Canada. Well, he doesn't own that. A company owns that. He owns the company, but the company owns it. And what does the company do? It raises buffalo. What does the company do with the buffalo? They sell the meat to another company called Ted's Buffalo Grill, the restaurant. And the restaurant, their main restaurant, where they have test kitchens, and by the way, you can go in and see the test kitchen, and where they train their staff and train all their senior employees. It's all done in that building. There's a Ted. So I took my kids to see Ted's. Like, it's like in the building. And so, this is where they train everybody. So I'm explaining it to my children. I said, he lives in that apartment up there for free. And in fact, the tenants pay him money, so he makes money living in his apartment. I said, normal people pay money to live in a house. He's a billionaire, but he lives in his house for free. And then he can come down from his penthouse and eat in his restaurant for free. I said, most people spend money on their housing and then food. But he eats food for free because he owns the damn restaurant. And then what's the number one expense for restaurants? The food they buy. Well, where do they get that? From his ranch. And his ranches are LLCs. And so now the ranchers pay rent and then all that, and he sits up there and he sees the CNN and he watches TV, but he owns the TV network. I said, he's a billionaire, but he doesn't ever spend any money. He's a billionaire because he doesn't spend money. In fact, he doesn't actually have any money. Now, the LLC that owns the land pays taxes. The LLC that raises the buffalo pays taxes. The LLC that owns his building pays taxes. CNN pays taxes. Ted's restaurant, Ted's Buffalo Grill, the restaurant, pays taxes And when it's all said and done, you have Ted Turner lived his billion-dollar life. And by the way, he keeps his airplane. In my city, I see Ted Turner's airplane all the time, although I haven't seen it recently, so maybe he's died. But that plane is probably owned by an LLC and then rented to another LLC, which he owns. So is it CNN that pays for the plane? I don't know. Is it Ted's Grill? Because he can just fly around and go to all his restaurants, write it off in his taxes. He probably spends $10 million a year putting fuel into his airplane. That's a business expense. But he flies around in his private jet all the time. But he doesn't have any money. Money is what poor people have. Now, would you consider him a legitimate billionaire? And you're going to say, yeah, he's a legitimate billionaire. But his ranches probably have debt. The farmer, the ranchers, like not just the ranch, then you lease it to the ranchers who then produce the buffalo. They probably have debt. The building probably has debt. CNN probably had debt when they sold it, right? Ted Turner probably has debt. And you might lean back and say, Ted Turner's a fool. He's an idiot. He's a liar. He doesn't pay anything in personal income tax. He doesn't really make any money. Dude, there's no billionaire that makes money. And then someone else sent me an email, I think it was recently, like, oh, but Mark Cuban has $3 billion in cash. Yeah, because he sold something. And then once you have $3 billion in cash, you must be an idiot if you're sitting on cash. You have to be an idiot. Cash is worthless. So the first thing you have to do when you have cash is deploy it. Get rid of your cash. Now, in this case, your cash is in your Forex account. You're not allowed to spend it because if you buy a TV, it doesn't produce cash. You just have a crappy TV that's already obsolete because you got it on sale at Walmart. Dude, you bought a 3-year-old TV for cheap. Who cares? We're already on 8K, bro. 4K, not good enough anymore, right? So so that's a terrible, terrible, terrible investment. Keep it in your trading account, but if you can take it out and buy an apartment building and the renters draw down your debt, but you got debt. Yeah, because the bank owns 80% of it, but you own the cash flow. You own 100% of the cash flow. They pay off the bank walks away with 3%. Who cares? And after 25 years, you own 100% of the building. The renters paid the debt. They paid off your major investor who owned 80% of the, right? So now you're over there, and now you got this building. It's gone up in value. You're getting this cash flow. Every year you do nothing, but it puts, $1 million in your pocket. And then one day you decide, I'm too old to do all this crap, and you sell your building, and boom, you got your 10 million. But you don't have a TV. And you probably don't pay taxes, by the way. And like I said, the 1031 exchange in the United States, if you're a real estate investor or developer, it's very, 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 very unlikely that you pay taxes. Do you understand that? If billionaires in the United States that own $1 billion worth of real estate, they don't pay taxes. They never, ever, ever sell. The way that the United States works is you can never, ever sell because what you've done is you've written off depreciation and they defer it as a tax. They're like, okay, you can depreciate that, but if you, like, for example, what is depreciation? You tell the government, like, okay, I own this $1 million property, but it's lost $100,000 this year because of maintenance. The paint eventually gets old. The windows eventually have to be replaced. The roof is going to go someday. And it requires maintenance. So it's gone down in value. Now, what's the likelihood, guys, that an income-producing apartment building is actually worth less? Right? Over 10 years, it's actually worth less. Like never. Right? It's never worth less. Like, what do you mean it's worth less? Well, I had to put in windows and I had to paint the thing. And so you wrote that off. But eventually when you sell it, the government's going to say, oh my God, you made $1 million profit. But you were telling us it was depreciating. You were telling us it was worth less every year. It turns out it was actually worth more every year. So now you owe us taxes because we gave you the tax write-off, but it's worth more, so you owe us taxes. So the thing I was talking about yesterday, the 1031 exchange in the United States, is you can flip it with someone else's property, and you can sort of exchange up, if you will, and you trade your property with somebody else, okay? And it's a form of selling without selling. It's a form of selling without touching cash. And what happens is now you own a bigger property than you used to. You don't own the 20 unit building, but now you own a 30 unit building, but you never paid the taxes on the first one, and you still owe it. It's deferred. So if you ever sell the second one, you'll pay taxes on the second one, and you'll pay taxes on the first one. So what'll happen after about doing this, 2 or 3 times, you can never afford to actually sell ever, because if you sold your $10 million property, you'd have to pay $12 million in taxes, because you have to pay on your first, on your recent building, the last building, the building before that, the building before that, and the building before that, and you're like, oh my God, I can't sell this. But the thing is, guys, is these are taxes you've deferred. So if you come across a real estate investor, billionaire, and they don't pay taxes, it's because this is how it works. You defer your taxes, and then the cool thing is when you die, your children inherit your entire portfolio that you deferred taxes on for 30 or 40 or 50 years, and those taxes are forgiven. So now your children inherit $1 billion in real estate, and the day before you died, you owed $400 million in taxes. But the day after you die, your family owns $0 in taxes. Right? So think of it. That's how it works. So you got to be very, very careful. You got to know what you're talking about. And so all these things where one billionaire is pointing fingers at another billionaire, you're not really a billionaire because you don't have any money. You don't, well, dude, you have to understand, you pay money, you pay taxes on money. Okay? And when they say Trump paid $750 in taxes, that might be true on his personal income. Okay? That's fine. But think of Ted Turner. The ranch paid taxes, the ranchers paid taxes, the restaurant paid taxes, his business paid taxes. If Turner Broadcasting is still around, they pay taxes. If CNN is still around, they pay taxes. Everything Ted Turner touched and owned paid taxes. But at the end of it, after all the expenses, he had no money, and he likely paid very, very, very little taxes. Okay? Only poor people earn a salary. And if you earn a salary, because you're exchanging your time for money, if you're paid a salary, you're going to pay 40 to 50% taxes. If you're not, if you are an owner, if you own a business, if you own stocks, if you own investments, if you own a trading business, if you own real estate, okay, if you own something, a trust, an LLC, a corporation, all these types of vehicles will mean that you pay very, 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 very little taxes. But how many people did Ted Turner employ over his lifetime? What was the peak? 30,000 people? Yeah, they paid taxes. And the companies they worked for paid taxes. And he wrote everything off personally, so at the end of it, there were no taxes. There were no taxes, but he got to eat a beautiful buffalo ribeye steak any night that he wanted. He could have a bottle of wine anytime he wanted. He could fly from Atlanta to Miami and eat in his restaurant there. And his $40,000 flight on his private jet was free. It's a tax write-off. He's visiting his restaurant. He doesn't make money. He doesn't spend money. I was reading an old book years ago, and old book from the 40s, and I think the story was from the 1820s or something, right? So anyways, put yourself in 1820s England, I think it was. And you know what? A gentleman never carried cash. Only a poor person would pull money like coins out of their pocket and buy some bread and buy some. No. A gentleman never carried money. It was always cash. He could go into a store and they'd just write his name down and write down what they bought, and he'd walk out. and his lawyer, his banker, someone else would take care of the bill, but he would never carry something as vulgar as money because they don't have any money. They have credit. Okay? So Trump might pay $750 in taxes per year. He might owe somebody $400 million. And that together means he's filthy, stinking rich. Okay? That's the indication. That's where the media doesn't quite understand. That's how you know. Because if he owes somebody $400 million, that's because they leveraged to buy something worth $500 million. So you might owe someone $400 million, but he's got a positive net worth of an extra $100 million lying around. Because you owe $800,000 to a bank doesn't mean you're broke. It means you live in a $1 million house. And over the course of time, right, you will draw down that loan and the value of the house will go up. And if you rented it out to somebody, someone else draws down the loan, buys out your largest investor, the bank, and then at the end of it, you own the whole damn thing, plus it went up in value. So think of it that way. If you own a mortgage, does it mean you're pathetic? You're a loser because you owe the bank money on your home? No, you own a piece of paper that says you own the home. The bank simply invested with you because you made a wise decision. Well, Michael says he's paid other, but it doesn't even matter. Like his business is likely paid way more than that, probably $500 million in taxes. So it doesn't matter. I'm just saying, money is interesting. How about that? Money is very interesting. The richer you get, the less money you'll have, but the more you'll own. Because why would you want money? Money is worthless. Okay? So when you learn finance, by the way, the difference between economics and finance is this. Finance is the study of cash flow over time. That's what a flow is. You have cash, or let's say income. Let's do it that way. You have income over time. That's what finance is. So what you do is you take cash and you convert your cash into income. How do you do that? You own something. You own an asset. Your TV is not an asset. It's guaranteed poverty. Your car is not an asset. It's guaranteed poverty. Okay? So you take your cash and you say, I'll give up $200,000 now. Okay? Take on $800,000 in debt. Okay? To own a $1 million house. Okay? Or a $1 million apartment building, fourplex, let's say. Okay? In 30 years, you owe zero to the bank. Okay? You might have refinanced it once and got your $200K back. And at the end, the property has gone up to $1.5 million. Okay? You got nothing invested anymore. You have no debt anymore. You got paid back, so your stop is at break even. And if you sold it right now, you would earn $1.5 million, but you decide not to sell it because after your expenses every year, you're putting $250,000 in your pocket. See, that's the flow. Okay? And you don't want to sell it because if you exchanged, if this is your third property, if you sold it for $1.5 million, you might owe $1.4 million in deferred taxes. So you're like, well, screw that. I don't want to do that. I don't want to give up $250,000 a year to have a $100,000 one-time profit because of taxes, right? So that's how it works. Passive income, owning an asset like real estate. That's the best. Okay. The other way would be like owning a bond, for example, or a treasury. But the thing is, you're the bank in that situation. Okay. So like, again, let's use the $1 million apartment. Okay. You buy a $1 million apartment building. Okay. Your largest investor is the bank. The bank ponies up $800K. They're your largest investment partner, and for that, you guarantee them the first 4% of the profits. Well, it doesn't even have to be, you just guarantee them 4%. Okay? After that, you keep everything else. So that's good. Okay, that's good. Okay, that's the nice thing about trading is we're leveraged, but real estate is leveraged too. Okay, but you got to be careful with the media where they say like, so let's say Trump again. Trump owes $400 million, so he's broke. Well, every time you place a trade and you go long, let's say you buy one standard contract and you're long $100,000 and you've only put in 10,000 of your own cash, right? Or actually 1,000, sorry. You've only put 1,000 of your own cash. And you're in a profitable trade. Okay? But you technically owe $99,000. Are you broke? Okay? No, you're not broke. You own a $100,000 position. Okay? You're not broke. You own something. Now, if it's a losing investment, you got to get out. And you're like, you know what? You pay off your debt, your $1,000 or whatever, and you get this whole thing back. But if you're making money now, your Forex trade is going up, let's say. It's appreciating in value, and you might actually earn interest on top of it. So you have income and appreciation in this asset that you own. The asset you own is $100,000 worth of a currency. Okay? So you might be shorting the Mexican peso, let's say. I guess I have to do it over here. You might be shorting the Mexican peso, which means you own $100,000 worth, right, of Mexican peso. So it's like you've lent Mexico 100,000 US dollars. You are a bond issuer. Well, no, Mexico's a bond issuer. You're a bond investor. Okay? Here's what you do as a foreign exchange arbitrager. You decided to lend Mexico money. Mexico will pay you back plus interest. And over the course of time, the value of your asset is likely to increase if you do this correctly. So, right? So you lent money to Mexico. They pay you an interest payment, and the value of the peso itself could appreciate versus the dollar. This is way better than your TV or your Lamborghini. You understand? How amazing is that? So my point here, guys, is there's active trading where there's like 27 little trades in here. But for some of us, there's jobs and other things going on in your life, children, parents, just life is complicated. It makes Forex truly look easy. Life is quite complicated. So if you cannot be in your front of your charts 8 to 10 to 12 hours a day, you need to know how to swing trade. And a swing trade says, sell here. You know the time in which it's probably going to happen, and you know the price in which you would consider. Now, the derivative of swing trading, there's two. Long-term swing trading is a position trade. That's like being short the US dollar for the next 5 years. And the other derivative is short-term, which we call day trading. It's the trade of the day. And the swing trade typically lasts several days, sometimes a couple of weeks. Okay? So anyway, so again, I'm off topic a little bit. It's Forex related somewhat, but sometimes it's just something. So maybe I'll save this stuff. I'll start Investor Boot Camp and we can talk about money in general, not just foreign exchange trading, which is the money crossing borders. But money in of itself is very much misunderstood. Money is a very strange thing. And it's very much understood. Mostly because none of us truly got an education about money. But, you know, I think Trump was taught about money. I think his dad knew a lot. Now, his dad wasn't a billionaire, as a lot of people say, but his dad did play the game, and there was lots of 1031 exchanges, and they would owe, you know, so Trump's dad would own the service that mows the lawn or repairs the plumbing. They would own those as side businesses, and they would charge a lot of money. So like, let's say normally a normal business would charge $2,000 a month to take care of a building. They would charge them $12,000 a month, but they own those businesses too, which is, you know, but therefore the building lost money and they could not pay taxes, but then they own these other businesses that did make money, and like, hey dude, that's how America works. That's the game. But I also think of young JP Morgan around the time of, I would have to imagine it was 1890, 1895. JP Morgan's dad, what was his name? Cornelius or something? JP Morgan's dad was filthy, stinking rich. JP Morgan's dad was a banker. JP Morgan's dad consulted with the Bank of England and gave them advice. He was an advisor to the Bank of England because remember, at the time, there was no central bank of the United States. And JP Morgan's dad walked in one day, and little JP Morgan was, you know, studying astutely at his desk, learning mathematics. He was just a kid though, like, I mean like a 10-year-old kid, right? JP Morgan's dad came in, handed him a bag and said, "This is $1 million in cash. I want you to lift it and carry it around. I want you to know what $1 million feels like." Now that's like $1 billion now. Can you imagine someone came to you like, "This, my son, is $1 billion. Lift that, carry it around." Okay? Do you think JP Morgan was taught about money? The real money? The illusion, not the illusionary money, but what the illusion money is? I think it's pretty interesting. So very few of us have the proper education, but very few of us are destined for greatness. So we'll have to support each other in this endeavor. What do you think, huh? Yeah, Master Trader said he's already multimillionaire. Yeah, multimillionaire. Sure. Well, pure mathematics says money depreciates in value over time. Well, I think the way to say it is time depreciates money. Right? And there's a reason for it, and it goes to the human psyche. One study that I remember reading in economics was you take like a 5-year-old kid and you hold an ice cream cone in front of his face. You're like, I'll give you this ice cream cone now, or if you wait 3 days, I'll give you 3 ice cream cones. Or whatever it is. I'll give you 1 chocolate bar. You can have it right now. You can go eat it. Everything's cool. Or if you wait 3 days, I'll give you 2 chocolate bars. They never take the 2 chocolate bars. And there it is. So it's not that, how did you say it again? Money depreciates in value over time. It's actually time depreciates money. Money is worth less in the future than it is today. It's really interesting. Yeah. Well, that's what, so finance, if you think about it, if I said finance is not money, but cash flow over time, then the whole point of finance is delayed gratification. Because we know the time value of money, but we also know the power of compounding. So that's like, if you could take a job, even if you don't need a job, if you need to have a second form of income if you need to live off your trading money. So if you made $100,000 last year trading Forex and you take it out of your account, you've just destroyed your business. You just destroyed it. The same way is if you sold $1 million worth of shoes and then you take your $1 million and you buy a house. Now you own a house, but now you don't have any shoes in your shoe store. Your shoe store is worthless. You just threw away a successful business. So even when you're profitable as a trader, you're going to need a side income. Now, I would preach to you that your side income should be you trading other people's money, because it keeps you in Forex. It keeps you in the game. The vast majority of your profits will come from you trading your money. Your money is awesome because you keep 100% of your profits. If you're trading other people's money, you only get 20% of the profits, and they keep 80%. So there's not big money in it unless you'd have no money in it at all. Your big money will be you growing your trading account 5% a month every month. And now if you can do that, you might as well do that for other people, and you can live off the money they pay you. And meanwhile, year after year after year, your money is doubling to the point where it's stupid. It's just so much that you don't need that much in your Forex account, and you would exchange your cash, because remember, what's in your account is cash. Cash sucks. And there's never a time where, let's say $100,000 in your account. There should never be a time where you have 80% of that deployed. Because the thing is, your account keeps growing. You're mark to market, so if you have all those trades on, you have positive equity, so you're never at 80% of it, unless you're losing money. Do you understand what I mean? So in Forex, there's never going to be a time where you don't have enough equity, right? Like, you don't need all of that. So what you'll do is say, well, I can reinvest some of this cash that I'm not deploying. Now, you'll treat it like it's still in the account, but let's say you'll take something out and exchange that cash for some sort of income. You might put it in a high yield account. So Goldman Sachs will give you a high yield account. It's not a problem. Now, it's only 2%. But that's probably more than you're earning in your Forex trading account on the cash that's sitting there. You're leveraging it, but you're not deploying it. So you're like, oh, well, maybe I can take some of that out, which means you don't need as much leverage. And that's the secret, right? Or you got so much, you're like, instead of, maybe you buy a bond and you earn 5% from Ford. Or even better, you buy real estate and you're earning now 12% a year. And you're like, well, wait, I'm earning 5% a month. Yeah, but you don't need to have that much cash. You're over leveraged. So if you're in a bunch of profitable trades, you're never, you're never down to like 70% available equity. That means you're losing like crazy. Well, then you're not ready. But if you're trading properly, you could have 100 trades open, and if they're all profitable, you have 100% equity, which means you can take out 50% of your cash and still be at 100% equity. You understand? Because all your trades are profitable, right? So you could then swap out and say, well, I'm going to buy an apartment building. I still kind of keep that in my net worth. You just move cash from here to over there. You gave up your cash to own an asset, but now you have this income. But whatever, just whatever. I'm just saying the world is a big, wonderful place, and cash is the illusion. So anyways, I hope you have a wonderful weekend. I hope all your weekly swings have all set up. I hope you've enjoyed our webinars this week. I hope you've learned something. I hope you've taken away something valuable, or maybe it was just entertaining and informative. Okay? So thank you for being in my life and part of my team. Thank you for being a part of the Forex.Today YouTube community. Thank you for being part of the Traders Way Traders community. Thank you for being part of the FX Bootcamp Live Trading community. Okay, my book is in the description below. My chart templates are in the description below. My training courses are in the description below. Link to Traders Way is in the description below. Okay. So anyways, have a wonderful weekend. Study hard. And I will see you all of next week. Monday, Tuesday, Wednesday, Thursday, and Friday. And wish me luck. On Wednesday, I start Harvard Business School. Whew. Wow. Cool.